The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And we got, let's see, not too many days left until the end of the year, and we want to make sure if we can pull a rabbit out of the hat, we want to give you the tools with which to do that. So I'm Esther Gulius, the Tax Lady from EG Tax. And, of course, I got my sidekicks in studio, Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday. We went to the Christmas party that they had at the station a couple days ago, and we had a really good time. And Merry Christmas. And
Merry Christmas to you, too. And Christopher Fabian.
Hello, Esther.
Odyssey.
Hello, Christopher. All right, so what I know from you guys, is your Christmas shopping done?
No. No.
So how much more you got to get?
Not a lot.
I think quite a bit. But that's sort of like how I am. When I have a party,
That is true.
I buy
That is
too
true.
much food. We went out to dinner last night with some friends, and I ordered too much food for everybody else. And it's sort of a pattern, I
You
think.
ordered food for them?
Well,
You didn't let them order their own food?
We ordered like appetizers.
Yeah.
Oh, I see.
Yeah. So
Well, anyway, I hope everybody, I've been invited to 2 parties on Christmas Eve, and I don't know what to do because I'd like to go to both of them. So if anybody's got any suggestions how to graciously do that, they're both at 6 o'clock
Oh,
on
yikes.
Christmas Eve. Yeah. Anyway, I'm Esther Gulius, the Tax Lady from EG Tax. Our offices are going to open up January 15th.
Yes.
And the IRS is open up right around the 22nd of January. So if you you come into our offices, even though we can't electronically file the return until they actually officially open up their software, we have it in place so you'd be the first one out of the chute, so to speak, right?
Exactly. Yes.
Okay. And then we have 32 area offices to serve you. We have a great staff. Everybody's up to date on everything that's going on. And, of course, you still have some time to affect changes to your 2023 return. And so we kind of thought we'd talk about that today. By the way, the top interest rate that I can see right now is 5.55% at Lending Club. It's a member FDIC bank. Minimum of $2,500 for 1 year. So that's Lending Club 5.55% for a 1-year CD. All right.
that's everybody. That usually piques people's interest, you know.
Right. And so let's see, for 18 months it's 5%. For 5 years it's 4%. So if you think about it, if you're hedging your bets at all, you might want to tie it up longer because 4% is a whole bunch better than what we were getting.
What
here.
do they say? Have your money work for you? You know.
Yeah, that's right. Okay, let's talk about last minute things. Again, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Would love to hear what you have to say, whether you're getting love letters, you can't pay your last year's liability, and you're wondering about this year, things that you can do, how to get out of debt, suggestions, taxes or your finances. So 8030930, 8030930, star 930 on a cell phone. First thing we have here is, we talked about this last week, use up the money that you've set aside in your cafeteria plans. Why don't you explain why that is and what that is?
Sure. Any type of FSA, not an HSA, but an FSA, your flexible spending accounts, whether it's for medical reasons, child care, whatever they give you for, you want to use it, because if you don't, you lose it. So that would really suck to lose $1,000 if that's what you have in there. So
That's right. So you want to make sure that whatever has been allocated that they've been putting into your little kitty and what, like Chris said, could be anything. You want to make sure that you have this time, you have the next 2 weeks to make sure that that's done before 12/31, or else you lose it. It's like penalizing yourself.
Yep.
Right. Another thing, the 1099-K form, we had been talking about this because the IRS was going to have people get 1099-K forms for third-party pays if you got more than $600 in a year. Well, that's been extended. They've chickened out again.
2 years in a row.
Yeah.
And so this year, if you had third-party pays up to $20,000, you'd get a 1099-K. Next year, it's $5,000, and then it's phasing in after that. So for whatever reason, they must have thought they couldn't roll it out.
Yeah, I was
Hang on one second, Tim. There are going to be businesses and people that are going to send you the 1099-K form, even though it's not required. And I wanted to talk about that, how you handle it and what that means.
Yeah, I was talking to Jimmy at the party, and he is also self-employed, and he's like, I am going to be so much in trouble this year with Venmo because I'm going to get a 1099. And then I told him about the change in the law, and he's like, oh, I'm going to be okay. But the point is a lot of people don't know, you know?
Well, and that's true. But here's the thing. Even if you don't get the 1099-K, it
Any
doesn't make any
income is
difference.
still
All
right.
income you
Yep.
receive is taxable, whether it's
Absolutely.
reported to the IRS or not.
That's right.
Right?
Yep.
We don't want to keep you up, Tiff. We hear you yawning.
Yep, sorry.
2 big parties last night, right?
No, just one. Yeah, just one.
So what to do if you do get the 1099-K, what that means, what form is it reported on?
Well, it depends what you used it for. Was it your business? Was it rental property? Or was it personal? Because they each have their own place where it goes on a tax return.
Right,
So-
and even if it's wrong and you get the form, you have to deal with it.
Yes, because it's 20,000 or 200 transactions.
Right.
So if you did use Venmo a lot, you still could get a 1099-K, even though it may only be $6,000 because of the transaction limit.
Or the company might just send you the 1099-K because they were ready.
Yep.
Right?
Yep.
So the bottom line to be prepared, and obviously if there were expenses that are tied to making this income, you get to take those expenses so that you don't have to pay taxes.
Yes.
All right. Okay, why don't we go to the phones? 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we got Bill. Hey, Bill, how can we help you?
Hey, Esther, I wanted to ask you about CDs and CD rates now, because from what the Fed was meeting, supposedly they might be lowering rates next year. So I see like some banks have 5.3% for a 9-month, and others have 5.67 for a 12-month, and a little less for 18. Would you sort of stagger them if you had a bunch of money you wanted to put into CDs?
you can stagger them. I will tell you, I think with my financial planner this week, who happens to be the financial guys, I think they got me 5 years at 5%.
Wow, that's cool.
So, but you might want to call your financial planner and see if they can't. And again, it's a CD. So there are more rates than we know about, because I'm not a money manager. I'm a tax accountant. So I can only tell you what I know. But again, here's another one at Alliant is 5.3% for a 1.5 year CD. So laddering it is always good. And this way, if you need the money, you take it out at something that has a lower interest rate. But again, here's another one, 60 month for 4.35% at Alliant. If you're interested, all you really need to do is go online and see what's out there. And 5% or darn near close to 5% is a lot of money if you have the extra cash. So laddering it is good. If I could get 5% for 5 years and I knew that I wasn't going to touch it, that's good too. But a good suggestion.
And then as far as the taxes they have to deal with that you would say, what do you have to really keep in mind?
Well, I mean, you're going to get a 1099 for that amount of interest, which has to be taxed on the federal and the state of New York. So if you're in the 10% bracket, you're going to pay. If you have $5,000 in interest, you're going to pay 10% on the $5,000 or $500. So that's kind of how it works. So you'd net $4,500 after expenses.
Sounds good. Thanks for the show. Appreciate it.
Okay. Thank you very much. Merry Christmas.
Merry Christmas.
Thank you. Okay, and we got Dave. Hey, Dave.
Should we take a break? We got to take a break first.
Okay. All right, Dave. Well, hang on. We'll be with you right after the break. I'm Esther Gullius, the tax lady. 8030930, 8030930, star 930 on a cell phone. Hey, I'm Esther Gullius, the tax lady from EG Tax. We just want to thank you for joining us on the show. If you have any questions, 8030930, 8030930, star 930 on a cell phone. There's no such thing as a dumb question. If you got a question, probably somebody else has too. So, and that really helps people to hear what you're thinking. So, and 716-8030930. And we have a caller holder, right, Dave, from Lockport?
Yep.
Hey, Dave.
Hi, Esther. I love your show.
Thank you.
Everybody there is so helpful. It almost makes doing taxes fun. But
we think it's
I have
fun.
I have a question about capital gains, and thanks for the information about last week about the 100,000 versus 100,000. You're not limited to the three.
Right.
3,000.
I knew that sounded like I was going way out there, but I thought sometimes that's the only way people can really get what you're talking about.
Yeah. My taxable income after the standard deduction as a single person is less than the single rate of, I think it's like 44,625, where you have to start paying long-term capital gains, as I understand it. And likely next year I'd have greater taxable income, which would probably push me into the 15%. Does it make sense to take as many long-term capital gains as I can to hit that before I hit that that level, even if I want to keep them or buy them back later?
Okay. All right. So let's first go back. Let's let people understand what you're talking about. Capital gains, which are the sale of capital assets at a profit, are taxed preferentially. In other words, they say, you're such a good person investing in capital assets, we're going to cut you a break. And that break means that you can pay 0% in taxes when you sell capital gains at a gain if the tax bracket you're in is 15% or lower. Okay? And so what you're telling me is that you're in like the 12% tax bracket, for instance, which would mean that if you have the sale of capital assets and they're under that figure where you'd be at 15%, you'll pay 0% on that. So is that a good thing to do? In other words, force yourself to pay the taxes up front so you can get a stepped up basis? It really is, in my opinion, and Chris and Tiff, see what you think. I think that we need to sit down and analyze everything and take a look at what your projected income is so we can see how it'll be in the future. It may be a good thing that you can do it this year as much as possible to pay at 0%. And it all depends on how your other assets fall into play. Now, you guys got anything else that you want to say?
Well, yeah, and you want to also look to see if you have losers too to offset the gain. So that would help bring it down and maybe sell some more. But yeah, it's not a bad idea. Just you got to watch that figure very carefully.
Because they are talking about, I mean, they're looking at ways to raise money, and obviously they're talking about pensions, they're talking about capital gains. So if you are somebody that really wants to hedge your bet, pay it now. You sell it now, you have zero tax liability. That's a good thing to do because believe me, they're looking for ways to come up with some more money.
And then don't forget, too, New York State doesn't have special tax rates, so you may end up owing New York State a little on them.
Right.
Okay. And if we were talking regarding tax loss harvesting, if I had $2,000 in short-term losses and could harvest that with $2,000 of short-term gains, does that actually get taken off your income
Well, it's exactly what you're saying. Is if you were going to sell losers that are representing $2,000 in losses, and you have winners of $2,000, they're going to be netted against one another first. As a matter of fact, if you had losers of $5,000 and winners of $2,000 that you had sold during the year, then you'd not only be able to take the loss on the 2 and 2, but the other 3 that's left carried over would offset other up to the $3,000 up to $3,000 would offset other forms of income that aren't capital gains. What I suggest you do is, Dave, you don't want to do something based upon a radio show telephone call. Why don't you call us? There's no charge, 632-7886. And Chris or Tiff or myself will be very happy to go over your situation so that you can see dollars and cents what makes sense.
Okay, great. Thank you.
All right, thank you. All right. And we have a text here, right?
Yep. It says, what is the married filing joint standard deduction if both people are over 65?
That's $30,500 this year.
Yep, you get an extra $1,500 per person that's over 65 for married. So.
And then there's one more caller, unless you want to do it after the break.
We got 5 minutes.
That's good. All right.
Okay,
that's
Mike.
Good.
We'll go to
Hey,
Mike.
Mike, how can we help you, sir?
Hi, how are you this afternoon? And thank you for taking my call.
Yeah, our pleasure.
I've got a situation. I've got a life insurance policy that I can borrow against the policy. I'm not taking the money out of the policy. It's a loan from the insurance company. I have a $400,000 cash value. The interest rate that they charge is 3%. So I'd be borrowing from the insurance company, not from my policy, at 3%. I found a CD that's at 6%. I would like
now,
to borrow
is it
that.
an annuity CD or is it actually a bank CD?
Yeah, it's a bank CD.
Which bank, can I ask?
Well, let me look it up here. I've got it over here.
Oh, that's all right. That's all right. No problem.
Okay, all right. It was on a different desk. But anyway, what I want to do, it would be, I would receive $24,000 from that bank in interest for 12 months. I only want to pay tax on $12,000. I ran into a problem in 2007. I made $27,000 with credit cards, and I tried to take some deductions for expenses that I had along the way. I was audited by the IRS, and they did not allow it. Is there any way that I can set this up if I receive $24,000 from a bank, but I have to pay $12,000 in interest to borrow the money? I'm only really going to have $12,000 that I can spend. I don't mind being taxed on $12,000. Is there a way that I can do that so that I'm not only taxed on $12,000?
Unfortunately, no, because you're receiving $24,000 in interest. The interest you're paying is non-deductible, so you would have to pay tax on the $24,000.
But if you think about it, you're making money off of tax-free money. I mean, that's a very great thing. So you borrow the money, that's tax-free. And
Right.
after you pay back the debt, it's costing you $12,000 in interest, but they're paying you $24,000. So you are now. And remember, you have your standard deduction. Are you over 65?
I am, but I take.
And you have other forms of income besides the interest.
Yeah.
So a pension plan.
I have about $60,000 of income a year now.
Including Social Security?
Right. That includes,
How much of it is Social Security?
Oh, that's going way up this year. I think I receive about $900. I don't have that number right here in front of me.
Your Social Security is only $900 a month?
$900. There was, because I sold some real estate, I'm going to be getting. It's going to go back up. It's going to be about $1,600 that I'll.
All right, because you're saying that you're having to pay more for your Medicare.
Yeah. What's your gross?
What's your gross
in Social
per month?
Security?
Let me see if I have that right here. Okay, here it is. My gross last year was $16,980.
All right, so you have about another $44,000 in other income from pensions.
Yeah, actually, it's about 50. No. Income.
Yes, income.
Income from my business.
Oh, you have a business?
Yeah.
Are you self-employed?
Yes.
All right, so, and you have a net profit as well, obviously.
Of about 50,000. Yeah.
Yay.
Okay, so are you putting money into an SEP?
A what?
A simplified employee pension or IRA?
I'm not putting any more money away. I've put money away for, all my
Okay,
life.
but you sound like a man that wants to make sure that you minimize your tax liability. Not
Right.
putting money away in your pension plan is just absolutely foolish.
And then don't
because you will that ends up to be a dollar for dollar deduction. As a matter of fact, you can do a solo 401k and put a whole bunch of money away, and you wouldn't have to pay any money on that. What I think you need to do is call us so we can look at a plan for you, because what you're doing is you're like robbing Peter to pay Paul, and you only care about the taxes. You ought to care about the entire package, how much you're actually making after you do all your little moves.
And then don't forget, as a self-employed person, you can deduct the Medicare on the Schedule 1 as a write-off. I hope you're doing that.
Well,
Take a break for
yeah, your folks.
Hard
you
break.
are doing my taxes
Oh,
already.
well then come on in so we can, or call on the phone and we have your stuff. We can do it over the
Okay,
phone
well,
with you. Okay, so
The
give
thing
us a
is,
call.
I want to spend that money that I'm making.
we
now.
gotta-
All right, you know
You
what?
wanna
I got a
hold
hard
them
break
over.
for news.
Hold them
I'm going to
over.
have to put you on hold. I'm Esther Gillius, the tax lady. Be right back. Hey, I'm Esther Gillius, the tax lady from EG Tax. We're here talking taxes. 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930, and we got our buddy just still holding, right?
Yep.
All right. So this is how I would look at your situation. Number one, as much money as I could get off the table that would be taxable would be really important. So if you did, for instance, a solo 401k plan, and let's say your net profit is $20,000, and you could put the whole 20 into a pension plan, that eliminates $20,000 worth of income, which also eliminates probably most of your possibility of paying taxes on your Social Security. So, I mean, then you really don't have much in taxes. And if you're doing netting on your gains and losses on the Schedule D, you may fix it so that you don't owe any taxes at all. So, and then if you had that $12,000 in interest, it may not make much difference at all. You might end up owing maybe $1,000, because there are so many things that you can do if you're self-employed.
Right. But if any money I put in, I would want to take right back out immediately.
Why?
And I want the money to live on.
You mean you don't have any income to live on?
Well, no,
You
my
need
income, you're
taxable
telling me to
income?
use my self-employment income to put that into a retirement, but that's what I'm living on.
Okay, well,
I'm
if
thinking-
it
No,
only
that's-
works if you have the disposable income. So you don't have. You were talking about tying up money. You have no liquid income, right?
Well, I have employment. Yeah, I have my business,
Okay.
and I'm taking. I'm $50,000 a year, but I don't want to. If I put that into the SEC.
Okay. Well, then going back to your original thing,
I'd wanna take
you're
it.
going to end up paying taxes on $12,000 on $24,000 if you do that. But
All right.
to me, it's a deal, because you're getting $12,000 after expenses that you wouldn't have gotten any other way.
Okay. I had last week. You mentioned a rollover taxable retirement into a charity account.
Well, but again, that you're giving away the money. So if you're doing a qualified
Giving the-
charitable rollover, you're getting rid of the money, and it
Right.
doesn't sound like you have any to get rid of.
No, I do. But
Okay.
see, I have.
Okay, all right. Well, then let's go back to square one here. This
Yeah,
is not the
different
place
thing.
for us to talk about something then, because It seems like you're contradicting yourself. So let's talk during the week.
So call the office and
Right.
we'll get you in touch with Esther.
Right. Then just call me and I will pull up your return and we'll go line by line.
All right. Thank you very much.
All right,
And you
thank
could
you,
talk
sir.
to EG.
To the old EG here. All right, let's go. We got Bill here.
Yep. Another
Hey,
bill.
Mr. Bill.
Yeah, this is Bill. New York State allows $20,000 for pension annuity payments. Now, this is
As a subtraction, yes.
And I moved $30,000 from 401k to Roth 401k. Aren't I allowed to take the $20,000 tax-free for New York State?
As long as you're over 59 and a half.
And there's not other, and you don't have another 20,000 in income from another pension plan. In other words, it's 20,000 total. So if you had a pension that you got 18,000 from, and you did that Roth conversion, then you'd only have $2,000 left to use, because it's a maximum of 20,000, no matter how many pensions you have, unless you have New York State pensions or federal or annuity or state pension plans, which are completely tax-free.
No, that's the only one I have, and they told me that I have to pay tax on it for New York State. They just sent me a statement this is for 2020 income tax. I just got it the other day.
Okay, but just because they send you something doesn't mean you need to pay it. So give us a call so we can interface for you with the state of New York.
Okay, you got the number?
632-7886.
Okay, thank you.
All right,
okay,
thank
bye.
you,
You
sir.
are very welcome. Merry Christmas.
Okay,
right,
we
and
got a text. Company was taken over, now caps the 401k at $132,000 as a high earner.
Right.
Is this an IRS option or strictly the company's option? Thank you.
All right, what you tell them, Chris?
That's the IRS. They come
the
up
law.
with that. And then
Every year they change it for a cost of living increase rate.
And then not to mention, too, if you're over 50 and you're considered a high earner, your catch-up provision has to go in a Roth 401k instead of your regular 401k because they want money.
Ding, ding,
That's
ding,
right.
ding. That's a
Absolutely.
new law, right?
Absolutely. Okay, and let's go to Jim in Williamsville. Hi, Jim.
Yeah, hi, Merry Christmas, Esther. I've got a
Merry
question.
Christmas.
Thank you. I'm 62 years old. I have a full-time job that I rather enjoy. I've been doing that for 37 years. I'm a passive investor in real estate, nice income coming there. Can I, at 62, take out the pension and utilize that pension money? I just want to use that as an investment, or will I be penalized, or can't I do it at all?
Well, okay, so are you talking about taking money out of your pension plan at work?
You know what? I'm sorry. I used the wrong terminology. The Social Security, which I'd be probably.
Okay, so you want to start you want to start drawing on Social Security at age 62. Is that what you're saying?
Correct.
Okay,
Correct.
may I ask what your income is?
For my job.
From wages, just from
37
wages.
The job itself is $125,000 a year.
Okay.
The passive rental income is $175,000.
Okay, so give them the bad news on the wages.
No, and you can't take more. You can't make more than
20,000
roughly per year. Otherwise, you have to pay back $1 for every $2 you're over to Social Security. Once you reach full retirement age, then the sky's the limit. You can make as much as you want in wages. But right now, your wages are about $90,000 too high. So once you reach full retirement age, which for you might be like 66, then the sky's the limit. You can make as much as you want. But until you reach full retirement age, you're not allowed to.
Okay, that's a story of my life. Always late for the wedding.
Look, yeah, but you're a young guy.
And you have a great job.
Yeah. I'm a fine wine. I get better with age.
Don't we all? All right, well, Merry Christmas, Jim.
Merry Christmas.
All right, thank you.
So make sure you're
Okay.
filling up your 401k. Great job. Great plan.
That's right. Absolutely right. All right. So going back to my little list here, things you should do before the end of the year. Make sure you pay your fourth quarter estimate to New York State if you need it for itemizing and you haven't already hit the $10,000 threshold, because that's an itemized deduction on the state of New York. Change your W-4 at work. to refresh your withholding and to get a full year of payments so that next year you don't owe anything. So especially if you think you're going to owe, changing your W-4 now gives you that full year of correct withholding so you're not caught with your pants down, so to speak.
Make sure when you submit it, it gets done. You got to check your pay stub. How many times?
That is true. That is true. You know, people will say to me, I'll say, gee, you owe money because you have less withholding. I changed it at the office. Did you notice a change in your paycheck? Well, no. Well, if there's no change in your paycheck, then it didn't happen, and you got to go down to Susie in accounting and say, Susie, I changed the W-4. How come my paycheck didn't change?
Yep, exactly. And
Good
especially
point,
with electronic pay stubs now, you don't have that physical thing to look at. You got to log in and you got to take a look at it.
Right.
So,
Right. And let's go to Pam. Hi, Pam. How can we help you?
Hi, Esther. Merry Christmas.
Same to you.
Hey,
Merry Christmas.
Thanks. Hey, I have a question. So I published a nonfiction Christian book in December of 2022, Bridge of Love,
wonderful.
30 True Stories of Faith in Action by Pamela Walk. Thank you. And it was doing really well on Amazon, and I've been doing book signings and local events and stuff. And the reason I'm calling is because you guys did my ST100. Maria actually did it for me, but she said, well, you can file it next time. I actually have an accounting degree from many, many years ago. So I'm online right now trying to file my quarterly for September through November. And I just had a couple questions. How do I get the ST100 to drop down so I can see the Niagara and Erie County, the differences?
there's a
Like when I look, I don't see any drop
on the main form, you got to click the main form, and then it would say select your county. And if you can't do it, come in on Monday.
Right, so we
Myself
can
or
show you.
Maria
We'll
will
walk
help
through
you.
you.
We'll
Right.
walk you through it again. That's not a problem.
All right. Because I'm just not seeing, I've got tax
And
summary for
sometimes,
my
you know,
name.
I was looking yesterday online for something, and it should have been so simple, and I couldn't get it to work. And I'm struggling and struggling and struggling. And I thought, you know what? I'm going to go back a page, even though I thought I shouldn't because I had already filled out all this stuff. I went back a page, and there was the box that I was supposed to check. I checked the box, and everything worked. So that's how electronics are. So if you can't get it to work, just get a cup of coffee, watch some nice holiday movie, Christmas movie, and call Maria on Monday.
Okay. And then one other question. When I sell books to people that I send out of state, like I have some friends in Florida and California and like all different places, do I pay New York State taxes on those? Do I include those in my list of sales for Erie and Niagara County?
No, not for sales tax. That would be your non-taxable. Because you're selling in a different state, they would be subject to pay what's called a use tax.
Okay.
And that's where they would pay the sales tax on it.
All right.
So
Well, I
They
think I
pay,
messed
not
it up
you.
for the
They
last
being the
quarter then.
consumer.
Right. They pay, not you.
All right. So I think I messed it up for the last quarter because I just, like if I sold it to somebody in California, I just put it down or something.
Well, you can always amend that.
Yep.
So when you're talking to Maria on Monday,
make
tell
an
her.
appointment, come in, and we'll get both done for you.
Yeah. Okay.
Thank you, dear. Merry
and
Christmas.
good luck with the book sales.
Okay, thank you. All
right, we need more good books, right?
Yes.
We need the good book and good books.
Amen.
Amen. All right, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 in a cell phone. You can text us at 716-8030930. I'm going to go to John first, and then we'll take the break. Hey, John, how can we help you?
Hey, I just want to know, when are the 1040 SR forms and instructions going to be available?
Probably not till mid-January.
Mid-January.
When?
Mid-January.
And where would I get those?
Online.
Oh.
Yeah, no more post office, no more walk-in clinic at the IRS, and I don't even think libraries had them last year, unfortunately.
If you take a look at the IRS's website and they talk about electronic filing, then they say if you're somebody that wants to mail in your return, bear in mind that we do not have the staff to handle these with any kind of expediency. And if you mail in a return, your return will be the last priority. So I don't know why people won't file electronically. You would be thrilled if you did, but it's up to you.
Okay. Thank you.
Thank you, sir.
Yeah.
I'm Esther Golias, the tax lady from EG Tax.
And
Yes, sir.
I just wanted to say to that last caller, if he wants to call the office, and it's easy, there's certain things that we could print for him and mail to him at no cost. So if it's easy, if there's certain things like a form. Okay, thank you. That's all I wanted to say.
All right. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone, and text us at 716-8030930. We're going to take a short break, and we'll be back on the other side with your stuff.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on now.
I love the Buffalo Bills. They are going to make me have an ulcer, but I love the Bills. Don't you love the Bills, you guys?
Oh, without a doubt.
But I'm going to tell you something. I saw something on Facebook the other day, and this guy was up at the pearly gates, and St. Peter was there, and he had a Bills shirt on, and St. Peter said to him, "So, son, why should I let you into heaven?" And he said, "Because, St. Peter, I'm a Bills fan, and I've already been to hell."
Very funny.
I mean,
That's true.
my God, I have no fingernails left when I watch them. Anyway, let's go to Lockport, right?
Yep.
Hey, how can we help you?
Hey, good afternoon, everyone. Great show.
Thank you.
Appreciate taking the time today. Just really a quick question. I'm right now a resident of New York State here in Western New York, and I work for a company that offers really the flexibility to work from home. So I've kind of enjoyed that post-pandemic, and I'm considering buying property in the North Carolina area due to personal reasons. And I guess my question is, I've heard a lot of different friends kind of comment about, things to consider when you own property in more than one state, which one should be, your primary residence and for terms of tax purposes. And, I've heard a lot of people talk about Florida, obviously, versus New York, but I really never heard about like North Carolina. And I just wanted to kind of pick your brains to see if kind of lay that kind of landscape out for me between those two states.
Well, good. First of all, is your name Cod?
Todd, yes.
Todd. Okay, they put cod. And
Like the fish.
Secondly, Chris does the tax return for several people who live in North Carolina. So I think
Right, but he's working from home for a New York company, and that's where it can get tricky because they'll probably still withhold New York taxes, so you'll probably have to do a non-resident New York and then file your North Carolina claiming that same income, but you would get a credit for the taxes you paid to North Carolina.
And then if you did have an office and home, those expenses, because you're on a W-2, are not deductible. So
in North Carolina.
And again, this would be where your primary residence is. So if your primary residence is going to be in North Carolina is going to require that you pay taxes on income that you earned as a North Carolina resident. But the state of New York will let you be a non-resident because that's what you are, but that's for income earned in New York State. And so then you're going to get that credit on your North Carolina return. So it's a way to avoid double taxation. But
okay,
it becomes a little more complicated.
Yeah.
Is there any long-term advantage to maintaining a residence in New York if I have two properties? I had a relative, unfortunately, where became very ill as they became older in life and went on Medicaid and pretty much, had a very nice large portfolio, which was seized and worked very hard. Didn't really have much to show for it towards the end. And besides Medicaid and, health insurance and anything else, I just wondered, is there advantage besides obviously, buffalo wings and pizza and and all that stuff? So
I mean, there's no secret that New York State is one of the highest tax states in the United States. That's number one. Number two, and that it's losing population. But number three, it is very nice to seniors. So people that have retired, their Social Security is tax-free on New York State. The first $20,000 in pensions they receive over age 59 and a half, up to $20,000 is tax-free on New York State. If you are retiring on a state, county, or federal pension, the whole thing is tax-free. So if you're going to be retired, New York State really has some great options for you.
Yeah, so
Okay.
to answer your question, is it beneficial to have a house, you mean in North Carolina and New York, for instance? Is that the point?
Yes, maintaining basically properties in both states.
Would you rent out the one in New York State?
You know what? I really don't know yet. I have to kind of see what happens. You know, I'm kind of in this gray area until my daughters figure out where they're going to college, what's the situation, and kind of waiting to figure that one out. And that's a whole event in itself. But
yeah, you can only have like one, what we call a star exemption. Florida calls it a homestead exemption for property taxes. You're only allowed one per house, for a house per person. So you got to really choose which gives you the better tax benefit.
North Carolina
for property taxes.
Right.
Yeah.
But again, if you're going to be renting out the house in New York State, then there are certain expenses that you get to take, and that would be good. But quite frankly, if it was your personal residence in New York State, if you sell it, are you married or single?
I'm married.
All right, so the first $500,000 would be tax-free. So you might want to just completely disengage from New York State if you're going to be working in North Carolina, sell your house so that you can take advantage of that exclusion and you have the free use of that money.
Yeah, no, that's a good point. And yeah, that's kind of things we're going over now and just kind of trying to evaluate what.
Well, if you want to bounce things around with us, there's no charge. So give us a jingle, and we'd be very happy to help you.
Yeah, thank you very much. I've used you guys before. I truly say that your staff is top notch at all your different locations in Western New York. So great job on really getting together a quality team.
Thanks, Todd. Merry Christmas.
Thank you.
And then we're going to go to Pam.
Pat in Florida.
Oh, Pat in Florida. Hi, Pat.
Hi, how are you? And
Good.
Merry Christmas to all of you.
Merry Christmas.
Where are you at in Florida?
About 45 minutes above Tampa Bay.
Is it raining there?
Yes. Yes.
Okay, what can we help you with?
Okay. I had to put my wife in assisted living, and I was her caregiver. My health is going downhill. The doctor warned me, got to do something because eventually I'll probably go before her. I put her into assisted living. Is there any tax advantages, or what can I deduct, if anything?
All right. Is she able to feed herself?
Yeah, she had 3 strokes.
But is she able to feed herself?
Dress herself?
Feed herself, dress herself, bathe herself, and potty herself?
She can, but...
No, seriously. I mean, the thing is, in order to take it as a medical deduction, she cannot be able to feed herself. She cannot be able to ambulate. She cannot be able to wash herself. She cannot be able to toilet herself. I'm asking, can she do these things?
Yes. Boy, they really thought this one out.
No, I didn't. I mean,
no, he's saying the government. The law.
And then,
the government.
Pat, is she in New York or Florida?
She's in Florida.
Okay.
So if she can do those things, then the expenses are not a medical expense.
Okay. Wow, boy, did they really sock you for putting them in one.
But the thing is, it's interesting to me because why is she in assisted living if she can do these things?
He's worried about his health and that he might be going before her, and he wants to make sure she's in a safe place.
Is that correct, Pat?
Yes. Yeah.
Okay. Well, then it's not a deduction.
Okay. And one other thing, while I got you on, I noticed I'm watching Spectrum in the morning when I get up at 5, and lo and behold, I see an ad, or they were talking about taxes, and it's EG Tax. And I said, geez, there's Chris. I've never seen Chris before. Now I can put a body to him.
I'm sorry that I look how I do.
Well, no problem.
And then, Pat, also you should know if her care ever escalates, there's a chance you can deduct it. So make sure
the whole thing is,
keep a pulse on that.
As she ages and in the event that she is unable to perform these functions, then it is a medical expense.
Okay, and it's getting worse, but it's to the point where I couldn't take
take care
I'm
of
sorry.
her.
Yeah. So, but I wish you
Well,
all.
now, do you have, just to get to look at your situation, do you have everything in place, a will? Do you have somebody to take care of you?
I put the stuff in a trust, and my sister-in-law is going to handle all that. It's been done with an elder lawyer here in Florida.
Okay.
Hopefully to put have my ducks in line when.
Right, and you have a caregiver for yourself, right?
No, I don't. I'm living by myself with my four-legged beagle.
So do you need somebody to be there with you?
No, she does. She's crying for her mommy. But,
but have you thought about hospice? Wouldn't hospice
no,
come in
fine.
and help?
I don't need hospice yet.
Okay, well, that's good. I'm just asking.
Pulmonary
Just asking.
fibrosis.
All right, well, Merry Christmas to you and God bless.
Thank you very much.
All right, thank you.
Thanks,
Thank you.
Pat. You keep up the good work, too.
Yep.
And we got time for Sam.
All right, hey, Sam.
Hey, how are you?
Good.
Good. Thanks for your work, all your hard work. I had a quick question about a 529 plan.
Sure.
I had heard that you can convert those into a Roth IRA for the beneficiary. Does that take effect next year, and how does it work?
It does go into effect for 2024. I'm not sure of the age limit or the dollar amount, but if you call us during the week, we can do more research and get that for you.
Okay, who should I ask for when I call?
For Chris. Ask for Chris.
Yep.
Okay.
All right.
The phone
Thanks,
number
Sam.
is 716-632-7886. And
All
I,
right,
I don't think we got this text. I do specialized testing of valves. That is a requirement of the government on commercial buildings. Should I be charging sales tax in New York State?
If it's a service, probably, but the best bet is to call New York State sales tax and find out for sure.
And if
Right,
you need
you can
help,
also
you
go
could
online
call
and
us.
they have a whole list of businesses as well. But it's best if you want to make sure, give them a call. A few things here before the end of, we got another week after this, but organize your receipts and store them away safely. Buy deductible Christmas gifts. If you're in business, like business items, cell phones, office furniture, equipment, that'll save you 15.3% on FICA. Again, it should be ordinary and necessary. You can do gifting up to $17,000 per person up till 12/31 of 2023. Then it rolls over to $18,000 per person without having to file a gift tax return. Sell losing stocks up to your winners plus $3,000. Give to charity. That's a wonderful thing this time of year as well. So anyway, I'm Esther Gillies, the tax lady. If you have questions, you can call us at corporate headquarters at 632-7886. We want to help. And remember, our offices open up January 15th for all of our branches. Our corporate office is open 9 to 5, special appointments evening and Saturdays until we open up officially January the 15th. Until next week, I'm Esther Golias, Christopher Fabian, Tiffany Fabian. God bless you. Thanks for listening. Bye-bye.